Hi, everyone. Welcome to the UOBK Hian CIO Series number 22. Today, we'll be discussing the Japanese perspectives on tariffs with implications to Japan, China, and maybe even the rest of the world. And we're very honored to have Hiroyuki Chida-san from Daiwa Asset Management on the call with us. Hi, Chida-san, you there? Hello.
Hi, everyone. Hello.
Hi, welcome. Yeah, I'll introduce Chida-san shortly. Before that, let me give you guys a quick update on what we've been thinking, writing, and saying about Trump's tariffs since the Liberation Day. One thing very different about this event is that the changes are not only big, but also very fast. Things can change in days and even hours. We will do our best to update you with all the events and our views, but I thought it's necessary to add some structure or some permanence to the process. And that's why last week we proposed the 4 principles of coping with Trump's tariffs at the IFA Research Symposium last week. And many of you may have seen this, so I'll be brief about it. First principle is that we need to admit that there are a lot of things that we don't know about Trump. We can talk about it, everybody has an opinion, but truly nobody knows. And it's important that we do not rush to conclusions. The second principle that we need to set up our radar screen correctly. Trump is the guy that single-handedly started this, and he can single-handedly end this. Therefore, I think Trump and his team should always be the top focus. And this is followed by the companies. Whatever they say and do are also very important to influence the outcome, and as well as the leading investor views and actions. The principle number 3, that as a investor, I always thought the word uncertainty is somewhat neutral. It's not necessarily negative. And if Trump can surprise us on the downside, he can certainly surprise us on the upside. Based on his history, this guy can change any moment. And lastly, this is very corny, but true, that stock market always go up over the long term and tend to beat inflation over time. And it's critically important to stay invested despite the market volatility. A quick recap of our 5 predictions for 2025. You may have seen this. I've been talking about this in the last 3 months. A lot of people ask us whether our prediction of the Chinese economy is still intact. I think it is. First quarter GDP came in better than expected. And again, let's not rush to conclusion that tariffs are definitely going to break the Chinese economy, because a lot will depend on what happened next between US and China, and also what China will do with the stimulus. And recently, we just had a high-profile Politburo meeting on stimulating Chinese economic growth. One thing we were wrong was on the US-China relations. Prior to the Liberation Day, US-China relations appear to be improving, but obviously right now it's not. Our third prediction about large cap US stock outperforming, it's coming true. If you look at the Magnificent Seven, they are down double-digit year to date, and is much worse than the average market. Asset price volatility, we also called on that, knowing that Trump will lead to higher volatility across all markets. We just didn't expect the magnitude and the severity of the issue. And lastly, on AI, we expect consumer AI to make breakthroughs in 2025. And if you think about whatever DeepSeek, Apple Intelligence, Robotaxi, and the humanoid robotic revolution, which are happening now, have everything to do with consumer AI. On the research front, we also put forward our China playbook post-Trump's tariffs, a simple one-pager on what's happening, what are the key statistics to know, and what are the key sectors and stocks to avoid. You may have seen this before. I won't go through it further. Just remember that China Mobile and China Resources Beer among these stocks are our core recommendation, and the Chinese bank CCB is a trading buy. Today, we also provided a re-ranking of the Magnificent Seven stocks after Trump's tariffs. Not much change here, except for Amazon. We moved from number 2 to number 1, given the valuations becoming more attractive, now trading at just 24 times price to earnings versus a historical average of 41 times. And a lot of people will focus on Amazon's impact, the tariff impact on Amazon, which is negative, obviously, but not too much people pay attention to their resilience, meaning the Amazon management ability to deal with the tariff, which we think is also very strong. So companies like Amazon, Meta, NVIDIA, and Microsoft, even Apple will do things. These are great companies. They will do things to mitigate tariffs. And we will hear more about that during the current earnings season. Among the Magnificent Seven, Amazon, Microsoft, Meta, and NVIDIA remain our top picks. Okay, going back to Chida-san, no introduction needed. We already show you that he's a very experienced manager from Daiwa Asset Management. When I started CIO Series, I always want to invite people who have more experience than I do. And Chida-san seems to have that qualification. And with that, let me turn to Chida-san to give an introduction to Daiwa Asset Management. Chida-san?
Thank you very much. Again, good evening, everyone. My name is Hiroyuki Chida from Daiwa Asset Management. Daiwa Asset Management is the asset management arm of Daiwa Security Group, a leading financial institution in Japan. We have a 63 years history and leverage of a robust Japanese equity research platform as a key strength. Our client base ranges from high net worth and retail investor to institutional investors. Our AUM was $213 billion as of March last year, but it has increased to $222 billion as of this March. Next.
Yeah. Thank you, Chida-san. And let's just start with the main content here. I remember when we talk about the Japanese experience with the trade war, I thought the history is very interesting. So maybe can we start with a short history lesson on what happened during the 1980s between US and Japan? I remember there was something called the Plaza Accord, but unfortunately I was too young to experience it. I think that came out when I was doing primary school. So what's your take on the history of the US Japan trade relations and how that may apply to what we're having today with the US and China?
Yeah, sure. This slide shows the similarity and the differences between the trade dispute between Japan and the US in 1980s and those between China and the US today. First, in section 1, US economic situation, we can see two similarities. One is the level of current account deficit per GDP ratio, which was minus 3.3% with Japan in 1985 against minus 3.9% with China in 2024. Another one is the trade deficit. In the 1980s, high interest rates, strong dollar, and a tax cut expanded trade deficit. Currently, post-COVID physical expansion and the rapid rate hikes by Federal Reserve since 2022 has caused a strong dollar and expanded deficit. In section 2, goods export, the similarity lies in the fact that Japan in the 1980s mainly exported automobiles and electric products, while China today mainly exports electric products and machinery, focusing on same hardware. In Section 3, U.S. concerns, the greatest concern is the increase in the trade deficit, which is a similarity. On the other hand, in Section 4, measures, while the 1980s saw automobile import regulations and currency manipulation allegations, the current measures involve tariff increases, showing a difference in responses. Moreover, in Section 5, political relations, while the 1980s were characterized by intensified tension but effort to cooperation, the current situation is marked by intensified tension and the stance of comprehensive confrontation, indicating a significant difference. In Section 6, economic impact, both situations are likely to lead a substantial decline in export. Finally, in Section 7, resolution method, the 1980s saw the Plaza Accord as a resolution method, whereas this time, tariff negotiations are crucial. We will discuss the Plaza Accord in detail later.
This is such a great slide. I thank you again, Chida-san, that when I first saw this, I thought this is a very good overview of the current situation, the US-China situation versus Japan. I didn't know there were so many similarities, and we should come back to this. And anything to note here before we move on to the next question?
Yes, thank you. Then this slide highlights another similarity in the trade deficit with Japan and with China as a percentage of GDP. When the US implemented Plaza Accord in 1985, trade deficit with Japan was close to 1% of US GDP. The current trade deficit with China is similar, also close to 1% of US GDP.
And that, that leads to the thing I always want to ask you. So what happened after the trade dispute between the US? We talk about the Plaza Accord. Can we give us some more details on that and how that affected the Japanese economy and maybe even the global currency system?
Yeah, sure. Thank you. This slide, can I take a look at this slide? In the early 1980s, the two oil shocks caused the inflation. This pushed up wages, leading companies to reduce employment. The unemployment rate rose and stagflation occurred, which is characterized by inflation with recession. During the period, Republican Ronald Reagan was elected president. President Reagan implemented high interest rates and strong dollar policy to curb inflation. However, fearing the high interest rate policy would worsen the economy, he simultaneously introduced income tax cuts and investment tax cuts. This is known as Reaganomics.
That's interesting.
These tax cuts.
We hope that interest rate won't go up in the US this time, otherwise it will be kind of scary. But some of the tax cuts are very similar to what Trump has been talking about.
Yeah,
on the Reagan era.
So people worry about this stagflation. It's a similar situation right now, actually.
Yes.
Yeah. However, fearing the high interest rate policy would So these tax cuts increase the consumption, but the strong dollar policy made imported goods cheaper, leading to the surge in import and expanding trade deficit. The primary contributor to this trade deficit were Japan and Germany at the time. This led to dissatisfaction among the US automobile industry and workers, resulting in US-Japan automotive friction. In Detroit, Japanese car was smashed in protest. To resolve the automotive friction, President Reagan held a talk with Japanese Prime Minister at that time, Yasuhiro Nakasone, who was close to him, and agreed that Japan would voluntarily restrain the automobile export. However, Under the high interest rate and strong dollar policy of a rearguard mix, the trade deficit did not dissolve. Consequently, the foreign exchange market began to speculate weakness of the dollar. To avoid an over-weakening of US dollars, the US, Japan, and European countries gathered at the Plaza Hotel in New York and agreed to cooperate in reducing the value of dollars. That is the Plaza Accord.
Okay.
Yep. This slide shows.
So that must have an impact on the Japanese economy as the US dollar weakens.
Yeah, you're right. You're right. This slide shows the JPY against the US dollar and the trend of GDP. The yellow line represents the movement of yen per dollar, with a downward trend indicating a stronger yen against stronger yen and weaker dollar.
Yeah.
In September of 1985, Japanese Central Bank, the Bank of Japan, or BOJ, intervened to increase the value of Japanese yen from 260 per dollar to 120. Next slide, please. Yeah, given Japan was export-driven economy, a stronger yen would negatively impact the Japanese economy. The slide shows trend of interest rates on the Japanese stock market. To counter the slowing Japanese economy, the Bank of Japan, or BOJ, started cutting interest rate from 8% down to 3.5% to stimulate domestic consumption. This caused the Japanese stock market and property prices soar, ultimately creating an asset price bubble. The bubble eventually burst in 1990, leading to almost 3 decades of stagnant economic growth.
Yes, the last decades of Japan. Yeah. Remember that.
Yeah.
So what anything we said here may apply to China in your view? I mean, we talk about the similarity of the trade situation with the US, and we also talk. You also talk about the US dollar weakening, which seems to be happening now, but maybe not, voluntarily. But what lessons can we learn from this?
Yes. Sorry, it's a blue line is a Japanese car production into the US, and yellow line is the export. Sorry, it's a missed out, the yellow one.
No problem.
The yellow one is the export. Yes, thank you.
Got it.
As you can see the chart, following the Plaza Accord, Japanese automobile manufacturing plants began to significantly relocate to the US. At the same time, export to the US began to decline, resulting in reduction of the US trade deficit with Japan. This shift was driven by the fact the value of US dollar against the yen dropped by more than half, enhancing the competitiveness of US as a manufacturing base. Additionally, Japanese government deemed it essential to reduce the trade deficit in order to ease the trade tension with the US, prompting political intervention. At the time of Plaza Accord, such a factory relocation directly contributed to reducing trade deficit. However, it is important to note that the structure of manufacturing industry has changed since then. Until the 1980s, vertical integration was common. So when a company like Toyota relocated the factory from Japan to the US, many of its affiliate component suppliers also moved together, allowing for relatively rapid production relocation. In contrast, today's manufacturing industry is characterized by global specialization, where each component is produced by different companies with production base scattered around the world. Therefore, relocation of single company's production base may not significantly reduce trade deficit like 1980s.
Yes. I mean, that's interesting. And cars are made very different today, and it's all about supply chain. And in fact, whatever you just said, it not just apply to cars, right? When we talk about something like Apple Computer, they also rely heavily
same. Yes, that's right.
on the global supply chain across sometimes 10 different countries for one component or one part of the iPhone. Okay, we can certainly talk more about the experience and the case of Japan in the past. I think this is such an interesting topic. For the sake of time, let's just switch gear and bring it forward to today. I saw on Bloomberg TV this afternoon about US Treasury Secretary Percent saying that US is making good progress with the negotiation in Asia. I think by that they may mean Japan. Well, because I cannot think another big major country other than Japan in this negotiation, and China certainly is not negotiating. So can you give us an update on what's happening right now with the negotiation, and what is Japan's strategy with this Trump tariff?
Yeah, sure. The negotiation, it's still ongoing, right? So no official, comment yet. But the resolution, just the two, right? Either increase export, reduce export or increase import. Just the two solutions, right? So this page shows, decreasing the exports. Since the Plaza Accord, Japan has continued to reduce its trade deficit, and the current trade deficit was US standards around 0.2% of US GDP. It's from 1% at the peak, right? So reduced a lot, but still 0.2%. Although the trade deficit has decreased, 70% deficit is still attributed to automobile and relating industry such as machinery.
Yes.
Japan's automobile industry will be forced to reduce export and increase local production and investment. However, as we discussed earlier, significant reduction are unlikely to be expected. So next slide, please. Then, this slide shows import side. Japan is a net importer of energy. In 2022, net imports account for 90% of Japan's total energy supply. The Middle East accounts for approximately 70 to 80% of Japan's energy imports, while the US contributes only 7.7%. So therefore, there is a potential for Japan to expand energy imports from the US. Additionally, in recent days, there has been increasing media reports about the expansion of food imports. Given the sharp rise in rice price since last year, expanding rice imports from the US at this time seems appropriate. However, changes in agricultural policies are politically sensitive decisions, so it is essential to monitor development closely.
Sorry. So you're saying that this time around, it's not so much about reducing Japanese exports, but really asking Japan to import more from the US. Do you think China will be part of that negotiation? Because there's a lot of speculation that all these negotiations, even though it's not directly with China, will probably involve Japan doing business with China.
Yeah, I think I think from viewpoint of China, its solution should be the same, right? Then the China needs to invest more in the US. Actually, it's not avoidable. And the more imports, it's easier way for China to do so. Yeah, the solution should be same. Then US governors understand for Japanese cannot choose either one, US or China cannot choose either one. Japan has to collaborate with US at the same time collaborate with China.
Do you think that's possible?
Yeah, I think, but possible, not possible, must be possible. Otherwise, they cannot resolve the problem, right? So, we think, Japanese politicians can convey the experience to China,
I
how
see.
to close the gap between the China and the US, I think.
Okay. Again, this is such an interesting topic. We've only scratched the surface, but I do want to leave some time for Q&A as well as for you to talk about your strategy. I understand that Daiwa is a world-class asset management firm specialized in Japan, obviously. And you run a very successful Japanese large cap equity strategy. So can you give us more information on that?
Yeah, Wanti, thank you very much for this opportunity. Yeah, as explained, while Japanese stocks are considered relatively attractive compared to other equities, determining the appropriate investment strategy is challenging. Given the current situation, where the Trump administration is frequently changing policy, we believe that investing based on specific theme or approaches carries too much risk. In this slide, we have proposed an effective investment style under the current uncertain external environment. The strategy we recommend is concentrate investment in blue chip, large cap, and quality growth company. Please note that in such an environment, excess diversification may increase the likelihood of investing in company that could be adversely affected by policy changes. So that's why we recommend, the concentrate strategy to excellent companies.
Got it.
Our strategy is actually, the concentrate strategy we are, the proposing is, the focusing long-term cash flow generation capability. So we don't invest in the cyclical stock, like a commodity trading company banks, which were influenced by the economy or interest cycle. So we don't include these companies. And additionally, the reason for recommending this strategy is excellent companies have already established sufficient local global production system, and compared to other companies, the impact of tariffs can be relatively controlled. It is important to select the companies that can pass and increase the cost of tariff, and this will give an advantage to excellent company. The table below outlines the specific competitive advantages, including global expansion capability, economies of scale, and funding power. These elements are essential for maintaining the competitive edge in the current uncertain business environment.
Yeah,
I believe Go
ahead.
Yeah, I think this approach seems the wanted recommendation to investor. Right? It's stable and visible. This kind of stuff, to be focused.
In this environment, being boring is not necessarily a bad thing. And just to share with you, Chida-san, I had a chat with a very smart hedge fund manager from the US. I had a hedge fund background. And he said that when comparing the policy risk between US, China, and Japan, he actually found Japan has more so-called policy certainty in the current environment. Even China, I mentioned earlier that even though China does want to roll out a stimulus, but we all know that China is always filled with policy risk. In fact, that's probably the biggest risk for global investors to invest in China, whether it's the regulation of big tech or a financial regulation, et cetera. So that's always very certain. And now the US also look like, because of Trump, have rising policy uncertainty. But then you look at something like Japan, maybe it's good that you want to invest in a country that things don't change that often. I mean, a lot of people complain about Japan because it doesn't change, it doesn't ever change. But maybe that's something you do want to have. So I thought that's an interesting angle. And the other thing you said earlier about the current the current US-Japan trade negotiation is really about Japan buying more from the US, not so much about Japan reducing exports. So maybe some of these Japanese blue chips or exporters or manufacturing companies or auto companies, maybe they are less impacted. But we should certainly dive into this more. And I'm a stock guy. I always like to talk about ideas. So I ask you to prepare some ideas to show to our sales and clients. So anything comes to mind that's interesting in your portfolio, especially in the current tariff environment?
Yeah, sure. Yeah, of course, we are investment manager, cannot recommend the stock. This is an example for, consider for candidates, right?
What do you think is
the first
interesting,
one is,
right? It's not a recommendation, but what you like.
No, yeah,
Got it.
That's right. All right. So first one is Capcom. Capcom is a major video game developer. The company's main title are action games such as Monster Hunter, Residential Evil, the Street Fighter, which are probably well known to you guys. By utilizing,
I think all Asian people like Street Fighters.
I just got news, the good sales of Residential Evil new version.
Just you don't need investor education on their products. Go ahead, please.
Please. By utilizing not only home video game console, but also PC platforms, the company is expanding sales of the game software in more than 230 countries and regions, including emerging countries, while steadily accumulating hit titles based on the development system centered in Japan. The company aims to achieve sales growth through repeat sales in a wide range of countries and regions, while strategically reducing prices, and over the long term, to achieve annual sales of 100 million units. Due to Capcom's substantial software sales, the impact of tariff increase is expected to be relatively small. This is a company which is relatively less affected by the tariff changes.
Because the gaming exposure. And it's a leader in the space.
Leader and more exposure to software, the not hardware side.
Software, yes, which is free of tariffs for now. I
guess so. Okay, this is the first one. Next one, please. Okay, next one is Mitsui Fudosan. Mitsui Fudosan is a major real estate company that owns numerous buildings in prime locations in Japan's major cities, particularly around Tokyo Station. And the strength lies in the leadership in urban development, as well as a large number of corporate clients. The company is also involved in the management of commercial facilities such as Lalaport, condominiums under the Park Street brand name, which has a high reputation in Japan, and real estate funds. The company has long been active in expanding its value chain and currently focusing on overseas expansion, increasing its assets in Europe and the US. The company is a prime example of the one that benefits from the robust growth of Japanese economy and the steadily rising real estate market. Also, you may already be familiar with Lalaport, which is also famous commercial facility among inbound tourists visiting Japan and benefit from the increased number of inbound tourists. That's it.
Interesting. So is this the largest real estate developer in Japan? Or one of the largest?
Yes, Mitsui. Actually, two. They're a big company, Mitsui and Mitsubishi, two companies, top two in Japan. So it's one of it.
Interesting. I just want to share with you that recently, when we talk about the Asian opportunity, not just Japan, right? Because we're a Singapore-based firm and we specialize in China and Southeast Asia. Right. When we check among our institutional research analysts about the potential opportunities, they almost all of them come back with real estate related situation, except for industrial real estate. Okay, but for commercial and residential real estate, they don't seem to be having any direct exposure to tariffs, and they all benefit from stimulus in their own countries, whether it's interest rate cuts or other forms of stimulus. And to me, that seems a more defensive position than say, high growth companies exporting to the US, or even technology companies are subject to either sanctioned by the US or higher tariffs because of manufacturing costs and stuff like that. So I think real estate could be a key theme here. And before we turn to Q&A, I always want to ask you this, and I'm sure that this is for people not only want to invest in Japan, but like you just said earlier, there are a lot of Hong Kong people, Singaporeans visit Japan for leisure. And for us, we always care about what is the currency going to be. Any view on that? And especially has relevance to investing in your fund, I think, because if we ask our clients to invest in your fund, that means they will have to take Japanese yen risk.
Yeah, thank you very much for good question. They are repeatedly asked us question. The left-hand side shows the sensitivity between the topics and the currencies. US dollar, the Japanese yen per US dollar. The right is the topics, earnings, and the same currencies, right? So if you see down bottom, the yellow one, it's a correlation, right? If you see left-hand side, correlation between the stock index topics and the currencies still there.
I see.
But if you see right, if the yellow line going lower means less correlation, right? So earnings and the currencies, you see, the yellow one, it goes down. So means correlation is weaker. So, market participants actually, they need to care the fluctuation of the Japanese yen, the US dollar. Of course, it may impact the stock price. But if you see fundamentals, you can see the right-hand side, correlation is weaker, right? So, we just discussed about like a Toyota's case. Most of manufacturers move the factory to overseas, right? So means the currency mismatch is small. So that's why any fluctuation of the currency will not impact the earnings so much. So that's why image-wise, yen dollar changes affect the stock price, but fundamental no impact. So means you may buy on weakness when the yen stronger. So such a something theoretical approach.
It seems to me, well, this is also quite fascinating. So that even though the correlation between the topics and Japanese yen are lower, but it's still at a relatively high level. So are you suggesting that from an investment standpoint, apart from what you just said, from an investment standpoint, you could have Japanese yen continue to weaken, but it will be offset by a rise in the stock index or the stock price level, right?
Yeah, that's right. This is actually theoretically, yes. And plus, we usually offer the three classes, like a US dollar class, Japanese yen class, and US dollar hedge class. That means, the investors who believe the yen stronger, but the Japanese market is good, then you can choose the US dollar hedge class. Then you can avoid, the Japanese yen increase. Sorry.
Got it. And Japanese yen is liquid enough to cut the hedging costs down.
That's right. So can avoid negative impact of Japanese yen appreciation, and can get the appreciation of the stock price. So it all depends. How do you see the currencies?
I see. Okay, let's stop here for a second and open up for Q&A. Before we do that, let's some logistic issues. This webinar will be uploaded to our Wealth Vision YouTube channel later. So if you want to listen to this again, or if you have your clients or you have a friend that want to dial into the replay, feel free. It will be up there in a couple of days. And then let me also introduce Nicholas. Are you there?
Yeah, I'm here.
Chida-san's associate. So Nicholas and Chida-san are both based in Singapore. Feel free to look them up. Here's the contact information. Feel free to look them up. And Nicholas, I understand you may visit our office from time to time.
Yep, every couple of months.
Okay. And then you're also planning a trip for both of you, Chida-san and you, to come to Hong Kong. So make sure we link up to set something up offline for Hong Kong sales and clients to carry on this conversation. I think it's very interesting, it's very insightful, and offer a ton of valuable information about what happened between US and Japan in the 80s, what that did that do to the the Japanese economy, and what lessons we can learn from it, and also looking at the situation today and what are the opportunities in Japanese stock market. So with that, let's turn to Q&A. If you have a question for either me or Chida-san, please use the chat window to enter the question, and we'll answer them in order to come.
Okay.
Double click here.
Yeah.
Any questions, please enter them through text, either in the chat window or the Q&A window. You should see it on your screen, and it will be answered in the order that come in. Okay, there's a question about let me read this and make sure I understand your question. Okay. Funds which previously borrowed the relatively cheap Japanese money flow back to the... So I guess this question is about the carry trade where people borrowed Japanese yen at a very cheap rates and buy equity. I think Warren Buffett's doing that. So that's still happening. In fact, we can also talk about any recent action by Warren Buffett in the Japanese market if you guys have any insights. And
Yeah.
Chida-san, do you expect that to be a driver for the equity valuation or the market price or the stock price?
Yeah, I think the carry trade is a big topic last August, right? So because of unwinding carry trade, the market crash, right? But now actually, carry trade almost disappeared according to the market, the news flows. But at the same time, the long position, the buying long position of yen is a historical high. It's not the carry trade, not necessarily, right? So I think the nature of money is different. But some hedge funds still speculate yen to be higher, right? So it's not a matter of the carry trade, but I think some speculative movement to buy yen is there. So according to the statistic.
I guess the scary thing about carry trade is not just the yen go up, but also the Japanese interest rate go up. So the same person asked about whether the Japanese interest rate will go up. Any view on the interest rate in Japan?
Yeah, sure. So according to the house view, our house view, so we don't expect any short-term rate hike. But by the end of this year, so means by the end of 2025, we expect one rate hike.
Yeah.
So I mean the 0.25% rate hike by the end of this year.
Will that be affected by the U.S.-Japan trade negotiation? Certainly, the Fed. I think the Fed is looking at the situation closely. I don't know how the decisions are being made in Japan with respect to JGB or the central bank, I guess.
Yeah, so actually, BOJ governors keep telling he will see the economic situation, so he won't be so aggressive. But at the same time, he will, follow the economic trend, right? So it means that it's the inflation keep going up, so he will increase the interest rate. But he worry about the uncertainty, the U.S. economy, right? So that's why the short-term wise it's a seesaw. But he's still tend to be up for interest rate according to newspapers. Newspaper means our house view. Yeah, sorry.
But gradually, right? Not like a spike, otherwise will cause chaos in the market again.
Right.
Like what we had.
Like 3 months ago, the market expected 3 times interest rate hike, right? But now only one. So by the end of this year, it's downgraded. Yes.
Okay, another question is on the Japanese yen. We talked about this before, but let me use this question to ask you about what we just talked about earlier, previous to the call. You said the Japanese yen trend looked very similar to the yen versus US dollar looked very similar today versus in the 1980s. Am I right?
Yeah, that's right. That's right. Yeah, but now the Japanese the like a minister, the financial minister, denied the rumor. The Japanese government puts a pressure to make a yen stronger.
I see.
But I'm not sure the reality. But situation-wise, as I discussed earlier, the situation is quite similar. So we expect the magnitude is smaller, but the overall shape is quite small, quite same.
Overall trend quite similar, but the magnitude is not as dramatic in the 1980s, where you have a major revaluation of the Japanese yen, right?
Yeah,
around the Plaza Accord.
Yeah.
Was Japan named a currency manipulator by Trump this time?
No, actually, the Japanese government worry about such a comment from the Trump, but so far, no such comment luckily.
Yeah, so Japan preemptively prevented that from the accusation of Trump calling them a currency manipulator.
Yeah, but actually, the BOJ governor always said we never, manipulate the currencies, but it depends on judgment, right, by Trump, right? So we are a bit worried, but so far, no such a bad comments.
Okay, here's another great question. I think you can probably help us answer, because what we saw is some major changes in the some unexpected upward movement in the U.S. Treasury yield, especially the long end, given that the risk of the economic recession is rising, but the yield also went up. So people are now speculating that China was selling, or now maybe even Japan was selling. So do we have any information on what is Japan doing with the currency reserve? With the U.S. Treasury, and how that may affect any view on the U.S. Treasury yield going forward?
Yeah, it's the U.S. Treasury, the yield going up means that the economy going to stagflation, right? But the market, I think the market has not discounted the risk for stagflation yet. Of course, there is concern. So our house view is the Treasury could be flattish. The Japanese Treasury went up a little bit. This is our house view. Yeah, I don't think the stagflation in US really happening, really occurring. I don't think so.
You don't think stagflation is happening, or you think stagflation will be happening?
No, I don't think so.
You don't
I
think?
don't think so. Yeah.
But my question is really about the Japanese government's action with respect to U.S. Treasuries. So we all want to know who's really putting the selling pressure on the U.S. Treasury.
No, but Wanchi, it's a really bad, right? It's a really Japanese need to sell the Treasury. It's a really, I think it's worst case. It's a really trade war.
So you don't think that's happening?
Yeah.
Okay.
Yeah. Because as I mentioned, the Japan has a good long relationship, discussion history with the U.S., right?
Yeah.
So I think both parties knows each other. I think the final joker never come out.
Okay. My next question is on the Chinese competition with Japanese companies. So we talked about earlier that you like blue chips in Japan because they are relatively stable. In fact, Warren Buffett also probably liked them for the same reason. But I see whether it's the Japanese auto companies or machinery companies or even some robotics companies, they all face intense competition from China. What's your view on that, and how that may affect your investment decision when investing these stocks?
I just asked, the fund manager, how do you see the Toyota? Except for Toyota, it's much weaker. So I think a question on that, maybe on the Toyota, right?
Yeah.
So Toyota is the largest company, the highest technology company. So the Toyota could be continue to be the leader in the automotive industry. But other than Toyota, it's very skeptical. So there is a winner, the loser. The China and Japan. I think it doesn't take too long, right? You may find the winner, the loser, much quicker than history.
Well, at the country level, we are already seeing China as the winner, because I think China overtook Japan as the largest producer of autos some time ago, some years ago already. But you're saying that within the Japanese auto industry, Toyota is still better off than the smaller, weaker players in Japan. So those are being, what are the possible names there? Just for us, for our knowledge to avoid. Honda is one of them.
Nissan, these companies much weaker than Toyota, right? So I think Toyota could be survivor. But China, of course, many companies, of course, can be, some companies could be winner, some companies loser. So the consolidation happening for both countries. But in Japan, I think the only Toyota could be continue to be good position.
Interesting. Okay, again, if you have a question, please use the chat window to enter the question. We will try to answer all of them as much as we can. Any questions, please use the window to ask your questions. Let's give it a few minutes. Any other macro topic in Japan that we missed? We talk about Japanese yen, we talk about the interest rates, we talk about Japan's strategy with the US negotiation and
I think like other countries, the stimulation package, what kind of stimulation policies is implemented? It's a key topic, right? In Japan, the government discussing like cutting the tax and how to stimulate the physical stimulation. So it all depends how the negotiation between the US and Japan going, right? If the negotiations are getting be tougher, then we need more to stimulate the economy. It all depends on the discussion. I think the same to the other countries, right?
And the stimulus will be more in the forms of monetary policy, lower rates.
I think not monetary, because it's no reason for BOJ to cut rate, right? So the either tax cut or the fiscal expansion.
More fiscal expansion. Okay.
Yeah, more fiscal expansion or tax cut.
Or tax, which we would expect after the negotiation. So the government need to wait and see how things are working out with the US.
Yeah, I think the physical expansion, the earlier.
Got it. Okay, look like there are no further questions. No further questions. Thank you again, Chida-san. Thank you, Nicholas, for participating in our CIO series. And we hope to talk to you again soon.
Thank you very much.
Thanks, everyone, for participating.